You know, Bitcoin right now is trading less than $800 below where above where you say the low might be. When you have that kind of momentum on the downside, are you redrawing your lines here at all? And is there a new low that you have to consider?
Listen, I said early in the year I thought we'd be 30,000, 50,000. You know, we were 40,000 literally just a week ago. And so the pace of this move has been severe, right? It's correlated with the risk off that you're seeing in all assets, right? The rise of the dollar. And so I still think 30,000 should hold, right? We'll see if 12,000 holds the NASDAQ and we bounce in the next few days, then I think you'll see Bitcoin 30,000 will hold. If the NASDAQ falls and we head towards 11,000, you know, there's a shot that 30,000 goes. I would tell you, getting away from price, which is hard to do in a day when the market's down 10%, it's really interesting if you just look back at all the adoption that's happened this year. I mean, the first quarter alone, venture funds have put $14 billion into the ecosystem. And so this is an asset class, right? Blockchain, digital assets, Bitcoin, that is getting tremendous investment, tremendous interest. And so while the short-term, you know, outlook is painful, it's going to be, like I said, volatile with the rest of assets as the Fed adjusts from free money to normalized conditions. My medium-term conviction hasn't wavered. I really do still see this as a very exciting asset class with a lot of momentum.
Michael, you were talking about the idea that venture capital is still moving into the market, but you do see a lot of pain in VC as well, or crossover investors. You were tweeting about Tiger Global, for example. But what are the ripple effects when these kinds of funds face so much tumult? You had mentioned restructurings could be ahead.
Yeah, listen, you know, we've had a lot of funds that have been spectacular investors for a long time that were longer the market than they should have been on a ride down, including yours truly in his, you know, I mean, most people over the last 5 to 10 years put more and more of their wealth in things that were less liquid, right? We had a huge bull market in that. And so that'll have to get worked out. Some hedge funds have great liquidity provisions and they'll just grind it out. Others will restructure, others will shut down. But that process of assets being redistributed is going to be a bottoming process that happens over quarters, not weeks. And that, you know, unfortunately, unlike most of the major sell-offs we've seen, if it's 18, if it was the crises for COVID, if it was 08, 09, the Fed was able to really respond. Yeah. The best response we're going to get here is, hey, we're only going to hike 250. And they won't make that claim until they see inflation expectations come down. Yeah. And we're a ways away from that. And so we're in for volatility and pain until there's an all clear on inflation.
And Mike, in for correlation, because I think that was the main hope, the prayer, the saying that was going to these institutional investors that have come into crypto is that this is a non-correlated asset, but thus far it's very correlated, in large part probably because more institutional players have come in and they're having to sell as they see the NASDAQ go down.
Listen, it had less correlation until there was free money forever, right? The correlation increased dramatically after COVID because every central bank took a fire hose of liquidity and sprayed it on the tarmac. And so it made all assets. You could look at the correlation of, you know, fine wines or baseball cards or any collectible to the NASDAQ to assets. And so we're unwinding this era of free money. And so it's not surprising to me that Bitcoin, which was a hedge against free money, is selling off. I do think those correlations will break down or will lessen the moment we find some stability in the market. But right now, if you're an investor, you've got 100 fires to put out. Did you overcommit to venture? Do you have enough liquidity to pay your private equity commitments? Oh my goodness, I used to be in risk parity. That doesn't seem to be working at all anymore. And so very few people want to put on new risk in a moment of this kind of tumult. And so I think once the tumult stops, I think that's a word, tumult. Once the chaos stops, then I think you're going to see the allocators who have been doing all their homework. Listen, I just went around the country and to a bunch of conferences. I am wildly convicted that there is infrastructure being put in place to bring lots of capital into the space. Yeah. And so again, it's surviving this unwind that investors have to manage.
When you talk about the unwind, though, Mike, you seem to be talking about a lot of people that maybe just saw the opportunity here. These weren't sort of the early adopters. These weren't necessarily the crypto faithful, if you will, at least not in the traditional sense here. For those crypto faithful out there here, do they look at this type of market and think you add to positions, you buy into this dip, or do you just kind of stay the course and wait for whatever shakeout is happening to end?
Listen, for the guys who have been in crypto a long time, longer than me, this is par for the course. For most people who manage institutional money or manage lots of money, this is unbelievably painful. And so you use the same kind of risk analysis you do when you're trading other assets, right? I would tell you, though, that the new institutional players that are coming in with a very long-term focus. I mean, and you can put BlackRock and Blackstone and Citadel and Apollo into that bucket, right? Those are four of the biggest names in investing, and that they're getting in, right? They're working on infrastructure and trying to help create institutional frameworks to bring their clients in. And so I don't think this asset class is going away because we've had a 50% sell-off.
I'm reading through some of the comments of the street who cover, of course, Galaxy Digital, and highlighting that on the earnings call, you'd hinted that maybe some of the leverage is out of this system now. What makes you believe that leverage is maybe out of the crypto space, and is that a good thing as you take a look at some of the losses today and the path forward?
Well, no, in some ways, it's a more painful thing because this is just long selling because people have bad prices. And listen, crypto still is dominated by retail. Retail trades with leverage. There's not as much leverage. You can show it by the volatility of the options market. Usually when you have a sell-off like this, option vol would spike, and it really hasn't. So people weren't, short options. And so I kind of think this is a sell-off because people were too long, and we're going to need a new story of Fed stability. It's not going to be Fed cutting, but Fed stability to draw capital back into the system.
Mike, there's a lot of talk about UST and the decoupling from the dollar, trading below par. I know you are long have talked about Luna. What do you think about this decoupling, and how long can it last? How low can that price go before there are really wide and longer lasting ramifications for a broader DeFi and crypto market here?
Well, listen, you have to remember this is still a young market, right? What Do Kwon at Terra Luna has attempted with and is executing with both UST, with Anchorage Protocol, and with Luna is what's called an algorithmic stablecoin, a stablecoin without central banks, without assets held at a bank, for a digital world. It's an experiment. It has been running. It's under a lot of stress. There's a classic, in essence, run on the bank. They are defending it. We will see how it goes. Certainly, it's not good for the overall ecosystem if it doesn't go well. But in any new asset class, in any new industry, you're going to see experiments, tried and failed, and some try and win. You go back to Elon Musk and you read his biography, there were 4 or 5 times Tesla was this close to bankruptcy, he'll tell you. He didn't say it during the time. He said it afterwards when something happened and he got through it. And now he's built one of the great car companies of the world. And so I'm just, we are in a frontier asset class. It does trade at 70 vol, right? And so people should expect you're going to see episodes like
70 vol, your clients, your analysts today have been asking you about the recession probabilities and how you prepare for that. How do you prepare for that?
So I think we are going to go into a recession. In some ways, that will be good for crypto because it will finally get interest rates calm and down again. Like, I'm sure we'll have crypto adoption both from investors. We're already seeing it with companies, right? So, but asset classes prices always get ahead of where the actual building of a company is, right? Tesla wasn't even selling cars, and they had a decent market cap. And so you got to keep the story up until you can build product that then generates the revenue. That's the process that's happening in crypto. And so what crypto needs is stability in the non-crypto markets. At that point, you'll see stability in crypto, and you'll see fast adoption.